Hi, you've reached the right place, if you are looking to invest in the stock market, but aren't sure what to do first. Today, I will explain the steps involved in investing in stocks. Number 1 is to determine your investment approach. First, you need to decide how you want to invest in stocks. Some investors prefer to purchase individual stocks, while others choose to be more active. There are many ways to invest in stock market. First is stocks by individual members. Individual stocks can be invested in if you have the time and desire for thorough research and evaluation of stocks on a regular basis. If things like quarterly earnings reports or moderate mathematical calculations do not appeal to you, then it's okay to take a passive approach. Next is index funds. You can also buy individual stocks, and they are very good investment, which track a stock market index, such as the S&P 500. It comes to active versus passively managed funds. I prefer the former. Index funds are typically much cheaper, and almost as likely to outperform their underlying indexes over the long term. The S&P 500 has delivered total returns of approximately 10% annually over the years, which can lead to substantial wealth. Then comes the robo-advisors. Another option that has seen a lot of popularity in recent years is the robo-advisor. A robo-advisor, or brokerage, invests your money for you in an appropriate portfolio of index funds. This portfolio is tailored to your risk tolerance and investment goals. A robo-advisor can not only select your investments, but also optimize your tax efficiency by making changes over time. Number 2 is the allocation of assets. This is the amount of money that you will not need in the next 5 years. This is a concept known as asset allocation. Here's a quick rule of thumb that can help you establish a ballpark asset allocation. Add 110 to your age. And, let's assume you are 40 years of age. This is the estimated percentage of your investmentable money that should go in stocks. This rule states that the 70% should be invested in stocks and 30% in fixed income. Like this video, so it can reach more bright people like you, absolutely for free, and subscribe for more